investors are eagerly awaiting SEC approval for Bitcoin ETFs. Those are expected out next week. But outside of this event and away from the huge rally we've seen in the crypto space over the last several months, our next guest thinks the investing world is still not bullish enough on crypto as 2024 gets underway. Gautam Chhugani is Bernstein's managing director and senior analyst in the digital asset space, joining us now to discuss. So Gautam, let's start with SEC approval, Bitcoin ETFs, your view on that. I guess the questions you get from clients, how you're having folks think about this event for the overall crypto space.
We do think we'll get the Bitcoin ETF approval by next week, hopefully. This is obviously a significant event, right? Because you're going to see funds flow from the traditional markets to the crypto markets. And this has usually been a challenge, right? Given how challenging the exchange space has been for crypto. We've had accidents in the past. We've got this massive fraud that happened in 2022 with FTX. So safekeeping and custody and sort of better user experience has always been a challenge with Bitcoin and crypto. So I think the ETF is a good start. We get to see regular people be able to safely custody the Bitcoin without worrying about safety, and I think that's quite significant.
And thinking about the role that retail plays in the crypto market overall, what have you seen from those investors in the last few months? How do you expect those investors to play a role in the market in 2024? Because it felt, at least to me, and maybe this is, maybe I'm wrong on this, it felt like late 22, early 23, that enthusiasm from retail really came out of the crypto market, and it feels like it's come back in a big way just in the last few weeks.
Yeah, for sure. So I think when an event like FTX happens, and obviously you saw many other bankruptcies with Celsius and Voyager, that directly hurt investor confidence, particularly retail investor confidence, because those were the ones that were mostly invested. Obviously, institutions didn't play that big a role in the last cycle. I think what's changed, in this cycle versus any other previous cycle, institutions have always been laggards in any crypto market, any crypto bull market. This time, actually, institutions have led the market, right? So the first news that came in June was the BlackRock filing of the Bitcoin ETF, and that was a big signal that went out to everyone else. And obviously, multiple other ETF applications followed, first with Bitcoin and then with Ethereum later in the year. So I think those two signals were very strong from an institutional standpoint. And even within for us as Bernstein, we've seen this play out where the overall retail sentiment was weak through 2023, but when it came to sort of large institutional clients, we were seeing that interest come back. So it's a different market, it's a different cycle. I think retail wanted that confidence, and now that institutions are leading it, now retail can come out in full force and feel confident about it. And this time they don't have to worry about custody and safety, which has obviously been one of the biggest challenges of crypto.
Yeah, certainly. And Gautam, when we take into account the run-up that we've seen in the price of Bitcoin and the price of a number of these crypto stocks there, how much of this has already been priced in? And when you take into account the other drivers, the other catalysts that you see here on the horizon for Bitcoin, what do you think then what that upside looks like?
Yeah, so I think there's been a bit of run-up, I think probably about 25% in the last 2 months. Clearly, that's not, what we call, the event being priced in. Maybe the event of approval is priced in, but what really needs to be priced in here are the flows. So we do expect significant flows, maybe a bit slow initially, and takes a bit while to, for the ETFs to integrate with the advisors and for it to become part of usual portfolio allocations of wealth managers and so on and so forth. But as the year progresses, I think we expect closer to about $10 billion plus in this year itself, kind of flowing into the market. I think we are being a tad conservative. And then obviously in the following year, we do expect overall about 10% of Bitcoin circulating supply to be custodied under the ETFs. And obviously that's quite significant. That's quite a significant number, which will mean, hundreds of billions of dollars of flows kind of playing out over the next 18 to 24 months.
Gautam, I think a lot of people are sitting at home listening to at least your forecast. They're very optimistic about what that pricing action could look like then between now and the end of the year and beyond. So what do you think are the top ideas or your top plays for investors at this point to really capitalize on some of that optimism that you see coming into the market?
Yeah, sure. So I think this year, the significant event after the ETF is going to be the halving. Halving is a significant event from the point of view of the fact that, the sell pressure is going to kind of be cut into half starting April 2024. The miners own Bitcoin and then they sell it in the market. And that's obviously known that this is going to happen in April. But when you combine that with the demand catalyst, right, the demand that's coming from corporate treasuries, obviously with something like MicroStrategy, but it could be even other corporate treasuries given the change in the FASB rules around how you account for Bitcoin on the balance sheet. And then as the ETF builds up, that's obviously another significant demand catalyst. So when you combine that supply from halving with the demand, that's where our bullish view comes from. And that obviously leads to, our forecast there. In terms of ideas, what we like are the Bitcoin miners. So we covered 3 names, Riot, CleanSpark, and Marathon. We have an outperform on those 2, which is Riot and CleanSpark. And there, obviously, it's interesting because we see miners as a high beta way to kind of play the Bitcoin cycle, given as the price improves, their revenue improves, that leads to operating leverage. And then obviously late into the cycle, you start to see their price multiples expand as well. So we do think that if Bitcoin, what we are saying goes to 150,000 in the cycle high, we think miners will do more than that, will outperform Bitcoin.
All right, Gautam Chhugani, thanks so much for joining us here this morning. Bernstein's analyst there. Thanks so much.
Great, thank you.